This is our video Forex blog for December 31st, 2010, and mainly you want to look for buys when the price is above the hourly, and especially if the weekly trend's up. In this case it is. You can see yesterday the euro dollar trended up all day. We also had a narrow range pattern last night, which if you had taken those trades you might have got out of a small loss here, break even on the second one. The third time the market exploded up and there was a resistance area right here, but the next one was way up here about 50 pips away. So if it broke through there, you had a really good chance of making 50 pips on that trade. The weekly trend's up. The monthly trend, however, is down, which makes this a little bit less odds. But that breakout there exploded up, and you had explosive statistical strength here, and therefore you want to buy the pullback. You might have got into this trade here. It went up about 25 pips, and then you have an absolutely perfect Elliott two-wave fib pullback trade right here, and one of our counter trend buy signals as well. Anytime you have Elliott two-wave pullback, which means you have explosive move up, it pulls back, doesn't really make a higher high then, and then pulls back to one of these fib levels. You go sideways right here, you go long right here around 33.30, and that just pretty much continued up, and you have a trend reversal signal right here. You might have got out anywhere on that move up with anywhere from 10 to 30 pips because the market didn't have that much statistical strength. But nonetheless, that trade worked perfectly, and as it usually does. The pound dollar also was an explosive move today. You can look at our currency meter. You can see the euro was strong and the dollar was weak, and the pound was also strong. So when you buy a strong currency against a weak one, you tend to have pretty nice trends. The euro was better than the pound because the weekly trend of the euro was up. Here's the pound dollar. Now note it was underneath the 10-day moving average. Major resistance, a weekly pivot level right here. You might not have wanted to take any kind of trades until it broke above there. The weekly and monthly trend was down, but the weekly trend shifted up as of 2 o'clock. We had a pretty explosive move up, pulled back to a support area. Once a resistance area gets broken where there's some selling, it tends to become support, so that's a great place to get in. This one didn't have the intensity that the euro dollar had, so you might have even bypassed this particular currency and focused on the euros, much higher probability. But nonetheless, you might have got into a trade here with a loss. This trade here worked, and then this pullback to a support level, which it didn't really go too far underneath it. Once it starts going back up, our IntelliTrend bars go green, you get back in. Dollar CAD is textbook perfect because the weekly and monthly trend are down. The price tried to get back above the hourly here and failed. And when it broke down underneath the hourly again right here in this previous swing low, you want to go short with your stop above the high. And you might have got out of that trade with a few pips profit and then went short again right here when it finally made lower low, or when it came back and tested the hourly here and couldn't get above it. That's a great place to go short, right at the hourly, because if it goes above it, you get stopped out with a super tiny loss. And a lot of times trends continue like this one did, and it just kept going down. Notice it wasn't that statistically weak. You can sometimes have big moves where the dollar may not be the weakest of all the pairs, or the CAD may not be the strongest, but as long as our IntelliTrend bars stay green, just keep lowering your stop, and that was an extremely good trade. And again, look at how it came up to the hourly here and failed. Even if you missed this trade right here, when it pulled back and wasn't able to go back up again, great place to go short, and this one just fell like a rock. And anytime you have this kind of weakness, usually on a pullback trade you can go short. This is our trend explosion system right here, and that led to another 15 pip move. Australian dollar, another textbook perfect trade because the daily, weekly, monthly trend's up. It was above the hourly all night. Notice how many times it hits the hourly and finds support. When it can't get back underneath it, when all the time frame trends are up, as soon as that sideways rectangle gets broken, you go long, and that went up 20 pips. This one about 10. Went sideways right here. You could have made 10 there. Pulled back here and made 10. In any resistance area that gets hit 2 times and the market doesn't pull back after that, usually when it does break through there, you're going to have some big trends. So you had a narrow range pattern right here, broke out. This was very likely to go up. This fib level up here was a likely profit target. It's about 20-30 pips away, and sometimes these fib levels don't stall right away. They're more likely to reverse and act as major selling when they're above our upper statistical containment band. But nonetheless, if you took this if you took every breakout trade, you might have had a loss or two, and then you eventually got 10, 20, 30, 40, 50, 60, 70 pips here. And notice the explosive trend up. So if this went sideways and broke out again, you'd want to go long, and you'd be looking for longs right here as well. Trend explosion, anytime you have plus 20 strength, usually after a little bit of a pullback, 20, 30 pips, the trend will continue. The New Zealand dollar is also textbook. Notice the daily, weekly, monthly trend up. It tried to go back underneath the hourly yesterday and then went back above it, and it's just going sideways here. Anytime you have the trend up and the market goes sideways, you want to buy the breakout. So you might have got in if you're trading the Asian session, which doesn't typically have as much volatility as the British, the Euro session and the dollar session. But if you would have got into a trade right here, you might have had a loss, and eventually you got in here and it might have made 20 pips. Notice how the fib level acted as a resistance area. There wasn't that much statistical strength. So, if it's not going up, you want to get out of the trade. And then it came back down and acted as support. This area got hit. There was some selling there clearly, but once it breaks above there, the next sell area is all the way up here, which is 40, 50 pips away. So it's worth risking 10 pips when you have all the time frame trends up. Notice there wasn't that much statistical momentum, but on the way down there was even less weakness than there was strength. That's always a good sign. When it breaks out right here, you go long, and that's a great place to get out of the trade. Notice again the plus 20 strength. So buying a pullback here, this isn't a perfect pullback, but on a tick chart you probably would have found an entry here, and then this is a much better one. Pulls back, trend reversal buy signal in the direction of the trend, and it took a while really before it exploded up. You probably would have got out of the trade here and bought the breakout again right here and made 30 pips in about 15 minutes. The New Zealand yen is a pair that I personally wouldn't have traded, but it eventually broke out. Anytime you have currency between multiple fib levels and support resistance areas like this is very likely to be choppy. So I would have just totally avoided this pair myself. CAD yen's a good example of how the fib levels work. Oftentimes, when the market comes down to this buy level, even though the weekly trend's down, it tends to act as resistance. You wouldn't necessarily want to buy this one, but be aware where these levels are because they oftentimes stall price. And if the weekly and monthly trend were up on this case, you might have wanted to buy down there.